Hey, what's up, good people? Today is a good day. Fed Jerome Powell during the FOMC meeting did a good job. If you're new to the page, hit the like, subscribe, notification bell. Continue to hit that like. It's the least you could do for all of the hard work. Fed Jerome Powell was actually sounding very dovish, not hawkish, meaning aggressive, but dovish, like a lamb, real dovish. He was like he was talking to his girlfriend. Yeah, girl, I'm gonna buy you a nice dinner, and then we going dancing. I just wasn't even used to hearing a Fed Jerome Powell like this. It was good for the market, and actually, earnings keep coming out. They keep coming out good, though we still need to wait and see what tomorrow will bring with big tech reporting tomorrow. That will be a market mover. If it is good behind a dovish Fed, we're talking about some really, really good gains and a really, really nice bounce. Then, right behind that comes the jobs report. And if it shows that jobs are cooling off, meaning unfortunately, people are actually losing jobs, then that's going to be more upward pressure for the market. Okay, good people? And so that's why this morning's I said, hey, we're not going to try to guess. We're just going to, I said, we're not making any moves, though most of us thought he would be hawkish. He flipped the script again. That's what he's good for. But I personally don't make any moves until after we get the data, right? So I made my moves. I did what's called buy the rumor, sell the news. You guys saw the plays that I was in yesterday and the day before, and I showed you where I got out this morning. My stop losses were triggered. That's called buy the rumor, sell the news. It is a good way to make money with limited risk. It could have went either way. Now, the true test is tomorrow, right? With today's numbers and tomorrow. He did say that we will have a few more rate hikes, okay? And sometimes it takes the market, hours to just dissect everything that was said because the market is forward looking, all right? So let's see what closing bell is going to do for us today as the Fed blessed us, and we'll go from there.
The S&P 500 goes out with a gain of 1%. 2% for the NASDAQ as tech takes center stage. A rally for gold, a sell-off for the dollar, and a rally for bonds. Dovish reaction to Fed Chair Powell. That's it for me on Closing Bell. See you tomorrow, everyone. Now into overtime with Scott.
The Dow went up. Let's look at it again. There it is. That's where it closed at. The Dow actually was up by 200 points shortly after the Fed got through talking. And then it gave it all back and closed flat. Why I think it did, just like I forestated in my earlier video, the market needs time to dissect all of the information that it was just given. And so that's why I think this is Stocks with Josh calling y'all. Hey, Stocks with Josh, I'm doing it live right now. I'm shooting a video. I'm not going to stop it, but I'll call you right back, okay? So this is what I'm saying. I'm going to be live with Stocks with Josh. We're trying to work on and see if we can have it tonight. But what I'm talking about is how it literally went up and came down. The reason I think that happened is because the Fed slipped something in there. Though he was sounding very dovish, he was like, yeah, blah, blah, blah. This is coming down. That's coming down. And this is looking good. That's looking good. We're just going to have a few more interest rate hikes. And da 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 da. And then I'm like, what? I'm like, a few more. Remember, he just went up 25 basis points, which is 0.25%. And now he's saying two more. And I personally don't think the market heard that. And sometimes the market has to dissect that. So now we're going to see how opening bell is tomorrow, right? But more importantly, not more importantly, but just as important, we're going to see how big tech earnings are on Thursday. We got some monsters. We got Alphabet, we got Apple, those type. And in a few here, we got we got Meta, which was Facebook, reporting. As a matter of fact, I'm going to see if I could get a little news before I post this video and share with you guys, because all eyes are going to be on Meta, Apple, Alphabet, which is Google. Those big companies, all eyes are on, because big tech is what's going to rule the market this week. You have the Fed, which is the biggest push on the market. Then you have these big tech earnings. Hopefully they're good. Then we can continue this bounce, and it'll be a sustained bounce. All right? Let's see what they say.
AUs look to have exceeded expectations as well. What do you see?
That's right. A beat on the top line. The earnings number is not comparable, and daily active users better than expected. Just to go through the numbers here, revenues coming in at $32.17 billion versus estimates of $31.53 billion. What's essential here is revenue declined by about 4% from the year-ago quarter. Analysts expected revenue to decline by about 6.5%, so better revenue performance than anticipated. The daily active user numbers hitting 2 billion versus 1.99 billion estimated. So better than expected daily active user growth. Of course, in light of competition from TikTok, that was an area in focus. The company also announcing restructuring charges. So this is not a surprise, considering the fact that the company did do layoffs in the quarter. So they're taking a $4.2 billion restructuring charge that's related to facilities consolidation, the layoffs, and also what they call a pivot towards a next generation data center design. They're talking about doing a data center that is going to have a better construction plan to support AI and non-AI workloads. Of course, interesting in light of the ongoing conversation about artificial intelligence. And so just to look at the operating expense, the restructuring here and the impact, the company says here that if they excluded that restructuring charge, the diluted EPS would have been $1.24 higher for the fourth quarter. And that's part of this, the comparison here. There's a lot more on Outlook, but I'll be back to you in a minute with that as well, Scott.
Let me just ask you a question.
So we see Meta's doing well. If Apple does well tomorrow, if Alphabet and Amazon does well tomorrow, you're talking about a sustained rally. This is all good news for the market. So if we have the jobs come in and cooperate with everything that's going on, we're talking about a really, really cool bounce, okay? A really cool bounce. And so, hey, it's doing well. As we can see, extended hours, still doing well. Meta, formerly known as Facebook. And why? That's because Mark Zuckerberg came back to his core values, which is, Reels and Facebook and all of that, left the metaverse alone, because we're years and years and years out from that. And what happens? The market, the shareholders rewards. And so Meta is doing good. The Fed was dovish. If we have big tech tomorrow continue to do like Meta does, we have a sustained bounce. We are doing good, right? But I'm not making any moves until I see the data. I'm going to trust the data, and then I'm going to make my plays afterwards. Yes, you can make plays leading up to. I did not have, you guys know I had Google, and you guys know I had some of these plays leading into. I did not have Meta, all right? But I did tell a friend of mine that I would not bet against it. And so he did some call options on Meta, and he should be happy right now. I'm going to ask him for my 10%. But I'm just joking, y'all. So that's good news, too. So that's what I wanted to tell you guys. Also, too, in my live, I was making a comparison. So I was saying that in trading and investing, there is not one size that fit all. And I made a gaffe. So there was an older gentleman that said 1%. He tries to get 1% a week. And I was just like, 1% is nothing, right? I made a mistake and said he had 50 grand. No, he literally it's traded with 100 grand. All right. And so if he made, and he said he was averaging about 1% a week. And so he was averaging about $5,000 per week. That was his average. So when you have a lot, and he's in retirement, his house, he had a big, beautiful house. He looks just like the Dos Equis guy. His house is paid off. He doesn't have, car notes and mortgages and all of that. So for a retired person to be able to make $5, $10, $15, $20,000 a month, just swing trading and getting 1%, he limits his risk. So that's why I say this is not one size fit all. So he's not going to take 100 grand and put it in Mullen. He does not have to assume that risk. And so we have to understand when we make these comments, we have to understand that you can't just tell everybody, oh, everybody needs to load up on AMC right now. No, that's not cool. What we need to do is everybody has a plan and stick to the plan that works for them, especially according to their age, right? I'm going to keep it real every time, regardless of what's popular. We're going to make money on the popular stock, and we're going to also make money on the stock that no one else is talking about, because that's what we do here, Stock Up with Larry Jones, all right? Make sure you download the top link below. This is Webull Wednesday. They just changed their promotion to 1 penny. You deposit 1 penny and get 12 free stock, all right? We'll see you later. Live, love, laugh, learn, and earn.